Good afternoon, everyone. Welcome to today's Daily Recap. I'm Evan Lazarus. I'm CEO of T3 Live. I'm filling in for Scott today on what is a very interesting end of week. Let's kind of go back and recap and sort of go through the evolution here of what's transpired over the last couple of weeks. You know, we had a market that's been, and again, I'm not saying anything you don't already know, been very choppy, non-committed, non-directional. We did see a breakout occur a few weeks ago, 2 weeks ago. That breakout has since failed. We saw that failure, a little bit of a snapback, and then we've seen some rollover. So, you know, the market has basically lost its strength. There were no buyers that came in at new highs, which ultimately, led to, I believe, this demise or the demise that's occurring. Now, if we put it into perspective, again, this is just a pullback into this general range. The first area I think we need to really key on for support is down here, and then below that you have these March lows. Now, when we talk about trading and time frames, we talk about short-term, intermediate-term, and long-term. And, things need to happen in the short term, and when those things happen in the short term, it changes the intermediate term. And when the intermediate term eventually starts to move, then the long term starts to move. So, we need to look at imagine looking at it under a microscope, and we start with a very wide view, and then we kind of drill down and we look at a lot of detail. So the detail is the short-term view. The detail is what's happening in the here and the now. So the here and the now suggests that, we have this failure at highs. We have a little bit of a rounding over pattern that's developed. We could see a couple of days of sideways here going into next week. It wouldn't surprise me. We did see volume increase pretty dramatically here on good volume, the sell-off yesterday, and today a little lighter. But nevertheless, we see activity picking up here on the downside. If this were to break in the short term, if we were to see a breach of this level, I do think we are going to trade back down to this, the March lows. So keep your eyes on how that transpires going into next week. If we go out and we look at a weekly chart, which is more that intermediate term, the intermediate term, it's going to show you the same basic premise, right? You have failure at highs right here. We got that initial turn down. You can see, again, volume rising here as the market starts to pull back. Over the intermediate term, we're still in an uptrend that goes back several years. As we go back in time and we look at, November, December into the year of 2015, it's been marked mostly by this range. You have this upper boundary, you have this lower boundary. You could basically slice this in half and say that, since January, February, we've spent the entire, year in this very, very narrow area. Should we break that 205 mark, then we're probably going to look to test that lower boundary here. So we're still in this intermediate term, channel. And as we go out and we talk about long term, and I'm just going to zoom out here, you can look at things like trend lines. You still have a longer term uptrend, but we do need to pay attention to, potential uptrends coming to an end here. If we are to violate, if in the short term we start to turn down and the immediate term starts to turn down, then you're probably going to see violation. And what looks to me and has, been developing for a long time, a larger sort of rising wedge pattern. That to me suggests that we are on the cusp of possibly breaking down, and a breakdown, in the intermediate long term. I think we could probably see a move back into this area. That's the SPY, 180. You have your 200 EMA on the weekly. Down here, you can see this black upsloping line. So there's a lot of forces at work here as we do our time frame alignment and time frame analysis, and we overlay patterns, supports, support lines, trend lines, and various sorts of ways of analyzing and evaluating risk and price. So that's kind of my 2 cents here on the market, and it's been a very, very frustrating trade because it's been non-directional. You've seen stocks, go up and stocks go down, but in terms of tailwind and having that market wind push, things higher and lower, it's been very, very fragmented and very, very segmented relative to very specific sectors and spots. You have to be very, very tactical in a non-directional, non-committed market environment, which is basically what we've been in. We do have failure at highs. I want to repeat that. And failure at highs, just like failure at lows, can be catalysts for, sharp reversal type of patterns, right? Buyers can't hold, and ultimately it kind of snowballs into that downside price action. So I think you really need to be on super high alert. If we're talking about military, we're going DEFCON 4, DEFCON 4. Let's just leave it at that. I just think you need to really be on high alert here for lower prices. That's basically what the market is showing me and telling me in my own analysis. Obviously, it's open interpretation, different ways of viewing the market. But if you're looking at it short term, intermediate term, long term, to me, I think you really need to be on high alert. And this market's been tough. Like I said, it's not been for everybody. Sideways trading is not an easy market. It's a market where you can easily chase highs, you can easily short lows, and wind up driving yourself to drink a little more frequently. So let's just leave it at that. I think that's probably a decent way to approach it. And at some point, this market's going to, at some point, don't know when, time not supplied, it will, break itself out of this range, and we will have some sort of range resolution. But markets can stay sideways for as long as ultimately the market wants. There's no way for me to tell you that on this date at this time, the market's going to break down or the market's going to break out. There's just no way for me to do that. So you need to be patient and you need to be tactical in the way you approach your trading, quality over quantity, especially in this type of environment. We did see lower today. Like I said, in the weekly, we did close the week, relatively on the weak side. We did break out of this very narrow range that we had spent the last couple of sessions in. I think, like I said, a couple of days of sideways, Monday, Tuesday, what have you, we may be on our way back down to, like I said, this short-term area. So be on alert for that. You have seen a lot of stocks, not necessarily make great moves, but very, very interesting little movement here. And I'm going to explain. I'm going to start with Apple. Obviously, Apple, a very widely watched, widely owned stock. You have failure at highs here. You have, 3 tests of this zone, 1, 2 here at earnings, and then recently 3. And we had failure. We did undercut this short-term support here in Apple, and this could, potentially spell trouble and lead us back to, the lower end of this range. Obviously, Apple's a benchmark stock, and always needs to be watched for clues about, direction, sentiment, and just general enthusiasm. One of my leading indicators always, if not necessarily a trade, just as a sort of an indicator unto itself. So keep your eyes out for Apple. A couple of very actively traded stocks. We're going to look at SHAK. SHAK obviously had that big, rally. It came back real hard, bounced, made a lower high, and it looks like it's starting to, see some price disintegration here. So SHAK to me looks like we probably have seen a high. Could we, spend some time in this range? Maybe over the next couple of days, but I do think we could probably see a trade in SHAK coming back to that lower to mid 60s, or potentially even down to this area where we broke out in the not too distant future. But obviously a lot of momentum and good intraday short-term price action there. A couple of others here we'll look at, sort of big names here. Banks, we look at Goldman. Goldman obviously bucking the trend here. You're seeing a little bit of strength in banks. We look at the XLF. Banks have been, relatively strong. JP Morgan, Goldman, Morgan Stanley, Citigroup, all acting well here in a down tape, which is promising. So, like I said, there are very select spots you can look at for strength. I think the TBTs in terms of the 20-year Treasuries look like they may want higher, while the TLTs look lower there. Google, not much doing there. Very strong resistance. 3 tests up here, and now sort of sitting under that 560 mark. But not really any desire to take this higher or lower. So it is a waiting game in that stock. I think above 560, the stock becomes a little more interesting on the long side. below 540-ish, I think, kind of sets the stage for lower prices. So keep your eyes on some of those trades. Obviously, I could probably spend an hour and go through lots of stocks. You have, retail stocks, Walmart, new lows again today. Walmart not showing any signs of buyers stepping in or anybody wanting to take this. Transports, you look at airlines, all looking like they want lower. United, American, railroad stocks, UNP sitting at lows, Kansas City Southern basically at lows. So, it is a very, very mixed market at this juncture, and you really need to, find a very healthy watch list that's either going to find, shorting weak stocks or looking to buy stocks that are bucking the trend. On the strength side, you have Netflix, flirting with new highs today, or actually closing it looks like, new highs at 633. You can kind of zoom in there a little bit. You can see Netflix. And so Netflix looking like it still has some probing to the upside. So, pick and choose your battles wisely. And I hope everybody's enjoying the summer so far and making forward progress. Lots of interesting developments coming to you this summer, probably late into the summer with T3 Live and some new products and some things that we've been building and working on. So I look forward to talking more about that. And as always, any questions, you can always get me via email. It's elazarus@t3live.com, ELAZARUS. Always love hearing from you. Hope everybody has a wonderful weekend. Take care.